Hi, Warriors. How's everyone doing this morning? Hope everyone enjoyed the Fed and then earnings after the close. How you doing, Steve and Mike and AJ? Hi, Blake. How you doing, Bran?
Morning,
Kman,
Coach.
how are you? Thank you. Hi, Blake. How you doing, Will? Linda Lyons, your new handle. Welcome to Face. Hi, Hugo. Ah, yes, Khan. Okay, we know you from X, right? How are you? James, Timothy, Ingmar, the whole team. Okay, so I want to start off with the yen, which has achieved one of the objectives where, the RSI did point towards new highs, and this high we're not confirming. So taking a shot there. See this? So here we had this confirmed high. So it didn't bum steer me a few times now. Okay, so we had the confirmed high here, which led to another high here, which was confirmed again, pulled back, and this time, look, this will be the second high under 70. So I'm playing it for some type of correction. And the Dixie, we took out the euro, took out the 1450 support, but it's right back there. Um, I think if you want to be short euro, that there's a possibility we could get a rally back to 116, be about halfway back, maybe 1650. Could probably play a counter trend. I think being short the end might be counter trend. We'll see if they could turn it. No divergences on these currencies. A little bit on the pound, but it's still under 30, and euro really no divergences here. So um, if we get a rally, that would be a nice selling opportunity if we got back up there. I know some people are still looking for new highs. So why don't I go to uh, Kman? How are you this
Hello,
morning, buddy?
Dale. Good morning, everybody.
So EG's making a comeback too.
Yeah,
This had
no,
a
yeah, we,
confirmed.
we were wondering yesterday about that one. I think there was, okay, getting out of euros, but the rest is month-end flows. And now we found support just above 86, the figure. That's, yeah, quite interesting on the euro sterling.
Okay. So you are you attempting at counter trend?
Yeah. You know what? It's month end, and looking at the equity markets hefty rally, there may be some dollar selling upcoming today, but I think until tomorrow's U.S. jobs report, we're
Yeah,
going to find deep buyers in the dollar, I would say. Somewhere, I must say, I'm not averse to corrections.
yeah,
Really, I'm not. But will those flows be swamped under dollar? Yeah, deep buyers. I dare to think so. Um, so we need to get above 132 and a half and stay there on the cable to have a chance to get back to 133. And similar kind of thing on the euro, 114 and a half, bit of a level. If
yeah.
we get
It
back above
was.
If
Yeah,
we get back above 70, then there's I think a chance for a bit of a deeper correction. Yeah, to talk about the FOMC yesterday, it was more hawkish than what the market was hoping for. So in the statement, it did seem that they threw open the door for a September cut, but then Powell,
got
after
it.
one or two questions in the press conference, it went all out of the window. The interesting thing, though, was at the end, where he said, like, okay, I mean, this is where we stand. Maybe everything is going fine, but the jobs market is going on the top of our watch list, and he repeated that. So I think that is very clear. So if tomorrow we get a bit of a negative surprise, then the dollar may get a bit of a hit, you know.
Okay. One difference in the S&Ps on
Mm,
this move to new highs compared to the last one, and I was short for from 408. Okay,
mm,
and there was 60, 70 handles. If you can't make money on a 70 handle move, that you didn't at least take partials somewhere. I took partials for 30. I
nice one.
didn't. I didn't. I just left my BE stop at '08, so I got stopped out on the rest. But see this up here when we were peaking for now, you could say ABC, and here's a new thrust. Look at this time. It is not confirming on this side. So I'm taking a shot again up here, risking 30 handles and see if we get a turn. Because if we take out this reversal day, I think it'll really accelerate back
Yeah.
towards
Dale,
62.
I was gonna say, but I mean, obviously we got two big earnings still tonight that are huge
Yeah.
from Apple and Amazon.
Okay.
Yeah,
So
just
it
after
does.
market close.
Yeah, it doesn't mean it could repeat. Like, I mean, what these guys did is like huge moves. Um,
Nasdaq.
well, yeah, Nasdaq, but the individual
Microsoft and
issues.
Meta. Yeah, they're both gonna
Look at
open
that.
breaking out.
Look at that. And then, you know, what else had a huge, yeah, Microsoft had a huge day.
Microsoft is outside of its channel that it's been following for years. And I mean, to the upside. It's
Yeah.
crazy.
Yeah.
Yeah.
Nvidia. And I guess I'm lucky that my only, my short in individual stocks is only Uber. There's something wrong with Uber. I mean, the rest of the market, and it's a darling. I don't know what's wrong with it, but
It's
it's sure
because they're
not
no
trading
cheaper than
well.
taxis nowadays. So it's like
Are you?
you got Robo Taxi and you got Waymo now. I mean, everything's going to be driverless. I don't know. They're behind the
Yeah,
curve there.
yeah,
So
and
And I
pretty
suspect
straight. Go
and I
ahead. Yeah.
suspect Dale to walk around in the evening, go and puncture Uber car tires, and then and at the same time you're short Uber.
I pour sugar in the gas tank. I think this is pretty unusual. Gold up 31 and silver down 50. Haven't seen that in a while. What a pop in the gold silver ratio. So um, yeah, I mean, I don't know how to comment on it. I don't think that gold's just gonna blow to new highs, but just like the euro could rally back to 116 or so, gold could rally back towards this broken trend line. Sometimes you get a back test on a breakdown, and you have a lot of confluence up there between 40 and 60. So I would sell a rip. I think this is just the first wave down.
You know what's
Um,
interesting, Dale, on gold, is that after quite a while of Asians not really participating, they are the ones who bought it,
they
um,
bought it. Okay.
gold. And I always keep a very close eye on which time zone does what. And there's been this talk, and Blake mentioned it about the Chinese going out of gold ETFs and getting back into stocks. But I think they're starting to get a
Huh.
bit nervous about the trade with the US, about they're pouring a lot in their economy. Yet the PMIs are coming down again, and dollar China is starting to move back above 720. Just maybe, they are starting to get back into it, and we'll have to pay close attention to what they do in Asia.
They have the worst looking stock charts. Here's the FXI. All right. I mean, to me, it looks like, it's on the verge of some type of breakdown, right? And, this could have been a three on the FXI. I think China looks bad. Is it possible that China's stock market suffers while ours continues to melt up?
Yes.
And I don't, okay. And so here's another example. It's a blue chip in China. You ask and you'll receive. Baba doesn't look great to me. So tell me how that could happen, that we could have strong bourses here and maybe Europe, and China continues to stock prices continue to deteriorate.
Well, I mean, you don't get a trade deal. China is
Okay,
trying to line Euro's pockets, but Europe is a bit reluctant as well to go further than any sort of very fragile cooperation needed to sell European cars over there. Then you have China still siding with Russia.
true.
I don't know. I mean, everything, and they, if they continue to side too much with Russia, the global investors are going to be reluctant to get back into China, and they can have like if nobody supports your market, it's going down. You know.
And here's really the chart of the year. Okay, and I bet you know what I'm going to pull up, right, Blake? Take a guess.
Wait, I'm sorry. You were asking what? What's
What
the
I
chart of
thought
the
was,
year?
yeah, there it is.
Copper. Yeah. Yeah.
Wow. So
Yeah.
every the shorts got killed and then buyers got killed. Uh,
Dale,
wow.
if you're in the chat room, Mark did a really great MRBH did a really great explainer on what happened with copper. I mean, it was really great. So yeah.
I actually know a guy who had a chart like this. I was just talking to Peter Goodburn over the weekend. We're friends, and he just popped up that chart and had a line like this showing a copper crash coming. That it's just amazing. This kind of volatility in copper, which used to be pretty steady eddy compared to precious metals. Now it's become the most volatile metal out there. And, a lot of people are very bullish copper as well. So their thesis is going to be, I think, tested here. Uh, what did he say was the reason for the sell off? Some people said it was
Yeah,
a
because he never
strong
got.
dollar,
It's the
Brazil.
Yeah,
refined copper. It's what's being tariffed and what's
Right.
not. And there was a huge premium built into New York copper between the LME prices, if I'm not mistaken. Is that right, Kman?
yeah, and the no, but the premium had been building up. That was Mark was explaining, but basically, he first of all Trump slapped tariffs on all copper, and then
You're
yesterday
right.
he excluded the best part of it, and that's why
Yeah.
it lost a dollar. But hey, I mean,
So,
really,
yeah, some
try
I know. You
you
think
want
they're
to trade it?
trading it? You think the family's trading it? There was a senator, I think he's a
Yeah.
Republican, who put out a bill so that congressmen, senators, and the president could not trade stocks
Oh yeah, but
anymore.
there's so many other people, huh?
Yeah,
There's there's enough other
President
people,
Trump Trump didn't like that, so he pushed back very hard on that. So, could be a pretty good source of income for guys that know everything before it happens. So, we'll see. Let's talk a little bit about um,
We're at,
the
by the
VIX
way, we're at
here.
161% extension in copper right now. And we're
Okay.
finding buyers there, surprisingly. Not unsurprisingly, I should say.
Yeah.
So,
So, I think that the dollar, um, if you believe that wedges retrace 100%, I looked at this as like 250, so 1.618 from here is going to be about four. That would take it to par 60 um, on the dollar. So we'll see what happens here. I mean, this breakout, I guess you just have to stay long the dollar unless it closes back under 98.
yeah, I mean it's an inverted head and shoulder pattern that actually points to above 100. So,
Well,
um,
here's the top of the wedge. So if it
yeah,
fulfills
that
that 101.50, Blake, is that what you have?
yeah, here I'll
All
show you,
right, here I'm
Dale.
going to give them to you.
Yeah, I'll show you what it looks like. Just so everybody knows what the Dale's discussing here. Um, let's get over to the dollar index. There it is. So you can see the target comes in, retracing that wedge
Okay,
completely.
right.
The neckline remember, this is a complex inverted head and shoulder pattern. So the target Yeah, it comes in around 102. So
Yeah.
there you go. I mean, where's that put the euro, Dale? I mean, that puts the euro, I'll tell you where I think it puts the euro.
112, 110.
Yeah, so it completes what we call a crab pattern, which will be a 112.50 or
Yeah.
so.
Yeah.
And I know a lot of people are trying to buy the euro down here. We are at the 161% extension. So it's no, I mean, where we stopped, everybody in our chat room knew that yesterday afternoon. We're like, okay, we're at 114.20s. This is the 161% extension. We started seeing a lot of our traders going counter trend long, which I think is a little ballsy going into Asia. So had no idea. I was like, there's no way I'm going to be stepping in front of that. But we had some good intraday traders that were, picking some up, on this very, very overextended move. But there's still further to go. All we've done now, if you look at like just an hourly chart, which we're on, we've worked off the oversold condition. So now the euro is free to actually move further because of the way that relative strength has worked off these
Yeah.
oversold conditions. So that's the other thing is you're like, well, I haven't got a lot of bang for my buck, as oversold conditions have worked off. I've only made 10 pips or 15 pips, and you had decent inflation data that just came out of Germany. And what read was that, Kman, that we got
Nah,
in German CPI?
nah, not really special. The only thing is that the month-on-month was creeping up, so we could call it a bit sticky, but then I think base effects and all of that kind of thing is it's keeping the year-over-year relatively stable. Even the euro harmonized was a bit lower than on the year-on-year. So I wouldn't read too much into today's numbers.
Okay. All right. Yeah. Yeah. So anyway, just you look at the euro and it to me it's just consolidating these losses, and the dollar is just consolidating gains right now. Now, Cayman, you pointed out what the FOMC said yesterday, or excuse me, what Jay Powell was talking about as
Mm.
far as jobs go. One of the most important things that I heard yesterday is when the reporter asked him, how what are you going to be looking through the tariffs, to gauge, um, you know, your judgment, but basically looking past tariffs, and he basically said, yeah, that's why we're on hold. So that comment in itself is extremely hawkish. Like if you think about that, the whole reason he's not they are not cutting rates is because they're looking past tariffs and knowing
No,
what's coming after the fact.
I think we understood something different there. He said it could be a one-off blip.
Yeah.
That is also what he said. So for the time being, we're on hold because we don't know exactly what's going to happen once we come out of it. But yeah, I think yeah, it is open for interpretation, of course. But I still think that the end is what is much more important, because if he says, look at the jobs, don't look too much at inflation right now, who are we to say we are going to continue looking at inflation? Of course, inflation is always going to be important, but I think he just put the job reports on top of
Oh,
everybody's mind. Yeah.
I don't disagree.
Mm.
But I think it was very hawkish to say we're looking past tariffs,
Yeah.
and that's the whole reason why we're not cutting right now is because they know that inflationary pressures are coming. But yes, I do believe that the jobs report is going to be really important, and that's why we're going to be laser focused on NFP tomorrow. So, and as you pointed out on the Flow Show, over the next, we have two more jobs reports that we're going to be focused on this month and next month before the September meeting. So it's gonna be really important. Man, real quick because
Sure, man.
because of time, this dollar yen, oh my God, it pissed me
Yeah.
off so bad because I got long dollar yen yesterday aggressively. I was I was pretty long dollars yesterday. Well, I actually am still long dollars pretty good, but I was really long yesterday. The dollar yen's peeled off about 70 pips ahead of the Bank of Japan. Then the BOJ came out and they upgraded, or they upgraded their inflation forecast, and dollar yen came down even a little further. And I took what was a 100 pip gain to a 20 pip gain. And there's that's extremely frustrating. There's nothing more frustrating than making a bunch of money and then losing it all in one trade and then going negative. That is the worst case scenario, and that's one of the worst things that can weigh on you as a trader is you make, like, let's just say you make 10 grand in one trade and then you lose 12 grand, and so you were up 10,000, then you end up walking away losing 2 grand. That's probably the worst feeling I ever feel as a trader, period, end of story. But if you make 10 grand and then you lose 8 of it and you walk away with 2, that's almost equally as frustrating. That's what happened to me last night. So, and then of course I get up this morning and the dollar yen is like a hockey stick straight up in the air. I about really wanted to grab all 8 monitors in my office and throw them right out the window when I got up this morning. So tell me
Do you
why.
think let me ask you this, Blake. What's
Uh-huh.
more aggravating and agitating to you, trading or golf?
Oh, well, at least golf, I can actually do shots while I'm playing, which is,
Okay.
something I don't do when I'm trading.
All right.
Which maybe I should try to incorporate into my day sometimes. I don't know. But
Anyway,
it both, I would say they're equally frustrating.
they,
But Kman, explain to us why the dollar yen ripped higher. And by the way, it is extremely bullish right now. Technically, we're above the 50 DMA. We're in breakout territory. I feel like I had it pegged and I let it go. But why is the dollar yen so strong here?
There's a couple of things. First of all, UEDA, they revised their inflation forecast higher, but we were already expecting that. But then at the same time, he said that the underlying inflation is still not stable, and it's stalling. That is one thing when it started. Then he was saying they're not sure about growth. The risk to growth have increased as well. Although he did add that it doesn't think, or it doesn't see a real sharp downturn. Sorry, on the back of tariffs, but they're still looking at wages. They're still not convinced about the real wages. And then at the time, we also had a little bit before, yeah, actually, no, during his presser, I mean, Muto came out, one of the trade guys, right, in Japan, that he says it's still not too late to put countermeasures onto the tariffs, which means that the US knows what they want to what they want with Japan, but Japan hasn't signed it yet, and that really started the ball rolling. They don't. Um, we know that they have to invest in the US. We know that they have to buy a lot of stuff from the US, and I think the market just turned around and said, okay, that's another month and a half of rates at 0.5%, and maybe in a month and a half they will still be trapped when where the US rates are rather around 4. So I mean, it's just while the pressure was ongoing, Dorian already started to.
Man, all right. Well, thank you. I had my take profit at these levels, like overnight, and then here we are at 150. So a couple things.
Well, I didn't have any dollar yen either, but I bought Kiwi yen this morning because I just thought, okay, I'm not too sure about the dollar, and yeah, yeah, we should have done dollar yen, of course, but even so, Kiwi yen, it's over 0.5% higher, and it's fine.
So a couple other things we should probably discuss really quick, just because because of everything that's going on here, is I do want to talk a little bit about shit. I forgot what I wanted to talk about. Now I'm thinking about two countries that are in the spotlight right now. A dollar max. Well, we have Canada and Mexico, and remember that we don't have like there's like outside of the USMCA, which is apparently going to get renegotiated, there are still products that are non-USMCA related that are still, subject to an agreement, I guess. And
Yeah.
Canada doesn't have an agreement. Mexico doesn't have an agreement. And we've seen now the dollar CAD, just so everybody can see this. This is the breakout. I am long dollar Canadian right now, and I'm obviously very carefully watching it just because, I mean, we could have a last minute, agreement. And even if there isn't an agreement, it doesn't mean there's not going to be an agreement. But you have dollar MEX, it's actually really probing on turning things around. And I know I've been harping on this in recent weeks about, it was a great short when it was at 20. Now that it's been shaved off and gotten to 18, which we talked about at the beginning of the year or the end of the year last year, we're trading at an 18 handle. It looks like we might have a little bit of a recovery here too. And this is like, full on dollar, mayhem. We break this 50 DMA, which, comes in right around 1894, which has been the recent highs. We break that 50 DMA, and I think we're going to see a bit of a squeeze there. So, yeah, maybe let price guide you versus trying to figure out what's happening in the trade agreement. And the dollar CAD,
Like, we
go
can have
ahead.
news on the mix today, yeah? Because there's the delegations are in the US, and Scheinbaum is expected to have a call with Trump today. So for
Yeah, it's
those people
hard,
trading
right?
mix, there could be something today, whether it's positive or negative. But I keep an eye on it because we could have headlines dropping. It's probably going to be in your afternoon. But yeah, I would say keep a close eye on it because it could be on the move, the mix.
Does
Very good.
anyone have any idea what's been driving WTI higher this week? Is it geo stuff? What? Because nat gas has gotten pounded, but WTI's had a
It was the Ru-
$5 rally.
it was Trump's comments about Russia. Like
Oh, okay.
basically
Yeah.
basically if
Yeah.
you're buying Russian oil,
Yeah.
that's why that's some people speculate that's why the India uh tariffs are so high because they're buying Russian oil. So basically what Trump is trying to do is saying if you buy Russian oil, we're gonna hit you hard. So that
Take some more oil off the market and
yeah,
increases
supply
demand.
concerns, and so
Yeah.
that's what
Okay.
sparked. And then everybody's short crude. Everybody's expecting crude
Yeah.
to go lower. So now you got a positioning issue.
Yeah.
I talked with Tracy regarding this on Ninja Trader Live yesterday. So and yeah, it looks like crude's going to be trading back up at the probably the mid 70s.
Okay. So she's constructive on it. Okay.
Yeah, she is. All right, guys. What I'll do is I'll get us prepared for the weekly unemployment claims. What other we have PCE coming out too. Shit, that's what else we have coming.
Yeah,
Uh,
but Powell announced it yesterday, yeah.
yeah, yeah. I mean, but the weekly unemployment claims I think is the one we need to be watching. And what did Powell say yesterday that
Two,
made you
as
believe
expected,
that?
2.5 on the headline, 2.7 on the core. I think watch the employment cost index. That is everything which is employment related now. What is that cost index? Because it has been kind of a mover in the past. So I'd keep an eye on that one.
All right, very good. Hey, one thing, guys, if you guys haven't taken advantage of the summer sale, remember our sale is dropped down to 2019 prices, 40% off month to month. But as long as you're active, you are grandfathered in, and so you can basically lock in your very low prices right now. Just wanted to bring that up. I'm going to pull up the data flash right here. I'm going to pull over our charts. We have the dollar index, yields, and S&P. We have less than a minute, and let me just mention this. If you guys haven't signed up for our newsletter, you will be getting your links to the risk management webinar. Dale's going to be there. Kman's going to be there. It's going to be August 7th. So actually, 1 week from today, we'll have the risk management webinar, and I believe it will be at 11 a.m. Eastern, everybody. So, but Ryan will be there, Stelios, Steve, Nick from Trading Analytics. We're gonna have I think Andre's gonna be there. Leandra's hopefully gonna be there. So make sure you guys sign up for our newsletter. All right, and that gets you signed up for some other free stuff too,
Here we
like
go.
trader funding program
Here we
stuff.
go.
All right, here we go.
Slow. Cost index slightly higher. Oh, PCE 2.6. He was wrong.
Wow.
We are 0.1 higher.
Wow. That's
218. Pretty cool. Good. Still good on the jobless claim. So yeah, nothing bad in there.
all right. I just took off my Euro scalp, just letting everybody know.
And we still can't buy dollar yen because it's going up.
Shit. That sucks. Yeah, I'm just letting everybody know in the and by the way, if you guys are not here in our chat room, just closed Euro US dollar at 114.33 on the Face show. So yeah, if you want to know running what Kman's running on positioning, what I'm running on positioning, and so many great traders are in here just talking about everything that they're buying and selling. You can be right in the trades room here with us and in the chat room and getting up to speed. Like this is Mark's comments. I just want to show you guys just these are the types of conversations that we're having. Let me just pull this up. This is such a great explainer from Mark this morning about copper. Like, if you want to read exactly what happened in copper, Mark does a really good explainer about the difference between the two and basically the arbitrage between the two contracts. And anyway, it's a great read. This is where we have all those conversations. So make sure you're in our chat room so you have a good understanding of what's happening. And to get to the chat room, just go to ForexAnalytix. Once you're logged in, right next to your name, you'll see go to chat room right there. You just click on that right above the live squawk feed, and it'll get you there. All right. Kman, great to have you this week, especially covering all the
Everything.
great, yeah, everything. Taking it from Ryan this week while he's been out, and Dale. It sounds like you're having a great time there in Southern California. So keep enjoying that.
Yeah, 75 for
And
a high today.
and let me mention Thando. Hell no, that's not Discord. This is our private, independent, exclusive. It is
Remember,
it's not public. No friggin' way. It's something we built for just our traders. So we
for
don't use
10 years.
Discord.
10 years.
Bunch of crap. Yep. All right. All
But
right,
which
Hey,
guys.
Thando
you
could be
know
one?
what? I don't like that name for a room, Discord. Don't we have enough Discord?
Right? That's
Well, so
true.
why be in a room that, the name says there's going to be some confrontations in there. So anyway, I don't like the Discord
Yeah,
name.
no, we build our chat room from scratch. So
Yeah,
that's why it's freaking amazing.
yeah,
And we don't have people peering into our community selling you shit.
yeah,
We don't talk politics, we don't talk religion, and no one sells anything to anybody. And if you do, you're kicked out immediately, and that's it.
yeah.
So
It's a
end of
traders
story.
club.
It's a
Traders club.
traders club. That's it.
It's not Mar-a-Lago, but it is a club. So anyway, thank you, Blake.
Hey,
Thanks,
thanks. And
Kay.
just reminder, everybody be here for NFP tomorrow. We'll be covering
Yeah,
it live. All right.
yeah, we'll cover it live. Tell your friends. And I have the pleasure of bringing back Arnaud Tertier. Arnaud, great to have you back. So much has happened since we last talked. We had that flush when we took out 5,100. That took us back to 5,600, took us back to prior highs at 48, and then a record recovery at new highs, and a strong dollar doesn't stop it. The Fed can't stop it. Tell us what, yeah, tell us, how parabolic this thing's going to get for us here.
Hey, good morning, Dale. Yeah, we're still in a melt-up phase, huh?
Yeah,
And remember in our previous call, we talked about the spike breadth thrust event and some other
Yes.
strong underlying market kickers, so to say, and they're still
Right.
working. And let's see if I can share my screen. There we go. And let's start off here with just the Dow Jones, and we had a spike breadth thrust event in April, and it is some quick recap on the spike breadth thrust. It is a number of stocks above a certain limit that needs to start advancing from a certain low to kick that in, and then really the market is in a kickoff phase. And if you would do that number, which on average is about 25%, the market gains on average, in this case, the Dow Jones, because it's originally based on the Dow Jones, gains on average 25%. So they've done the math on all previous events, and then each event, not always, but on average led to 25% gain, sometimes more, sometimes less. There are actually occasions when the market would go lower first before it goes higher. We never went lower, in this case below the April low. And then for the Dow Jones, the spike breadth thrust event occurred at around 40,000, 25% higher, you're at 50,000. And that means the Dow Jones still has about 6,500 to go, or 5,500, somewhere around there. So we're not there yet. That I think is the end of story. Again, it's an average, but then we're going to look at, hey, we have, of course, the Elliott Wave. I'm an Elliottian. That's my preferred method of choice to analyze the markets, to see where how high and how low it will go. And we have our target zone for a third wave, in this case, that of an ending diagonal, so it's not as high as in an impulse. And we look at 52,000 to 54,000. So then that spike breadth thrust all of a sudden starts to make a lot of sense.
Okay.
That's pretty much how we're looking at it. Now, of course, we're not then just going to, close our screens and
take a
sip a margarita at the beach and just, hopefully, and hope that it works. So we continuously monitor and track, of course, the markets, see, are we actually going to get there? Is that spike breadth thrust, among other things, going to do what it's in general does? And one of the things, of course, we use are warning levels, and warning levels will tell us, well, probably not. So the lower we go, of course, if we go below the April low, we know the spike breadth thrust event won't happen, right? So that is what we call our red warning level. It's our fourth warning level. And we also call it, that is, your second hit. It is, your ship is being hit once or twice. If you get hit twice, it will sink. And then it's over. But of course, we already get warnings before that. And the other ones are, of course, a little bit higher. So they tell our, newsletter members, like, hey, it's time to start paying attention. And at below a certain level, there's just no more upside left. Something else is going on. The spike breadth thrust, great, but this case is not working, and we move on.
What would be your first sign in the S&Ps that the market's taking a hit and the breadth thrust may not complete? Okay, so I see you have a 4 possibility of a pullback for a 4 here.
Yeah. So this is the S&P 500. What I just shared was the Dow Jones. That's a monthly chart. Every candle is a month, and zooming out of in here, this is the S&P 500, since you mentioned it. This is the daily chart. And also here on the daily chart, we have our warning levels. And the last low that was important, that was on July 13 at around 6,200. I think it was 6,201 to be exact. If we go below that one, we have a larger pullback underway. But we don't have to wait that long. So we have different warning levels, and they're being raised as the market rises. We raise our warning levels. And the bears have just been unable to break the market below what we call the critical warning levels, orange and red. So yesterday, you can see here, so this is, of course, still the price chart from Wednesday. And on Tuesday, actually already on Monday, because on Monday, the market was still higher. On Tuesday, it was lower. And if the market starts, of course, dropping, we keep the warning levels as is. And on Monday, we raised them. And then we had a second warning level at 63.36. That was our second warning level. That was this little high here, if you can see my cursor. It's all based on price. And where did we bottom yesterday? 63.36 exactly. So we don't put those warning levels out just sucking our thumb. That this is of course based on previous highs, previous lows. Logical deduction of the price charts.
All right, let me ask you on that.
So far, nothing's happened, so we can stay comfortably long. Because this is what we call a second warning level. It's like, you kind of get a shot across the bow. The market is giving us a shot across the bow. Hey, start paying attention. But nothing else happens. And looking at the futures market currently, seems like nothing is happening. So we're still looking for higher prices. But we are in our price target zone from where chances of a pullback increase. That is this gray target zone based on Fibonacci.
Let me ask you this, Arno. Does it make a difference whether it tags it or takes it out and closes underneath it? So
it's about the close.
It's about the
touching
close.
It doesn't matter. That's a nice intraday touch. It shows you it's an important level. The market listened to it, but it needs to close below it. Why? Because we believe, and I'm sure a lot of people can agree, the closing price is the most important price of the day. Once the market opens, all it does is rushes eventually towards the closing price. That's all that matters. Yes, we do use these warning levels based on highs and lows, but eventually we want to see a close below it. So you kind of got, all right, hey, it just shows these warning levels are apparently important. We've seen many times that the market tags it and then just bounces off it. Why? Because in this case, it was a previous high. And from a pure technical perspective, it just kind of retested the breakout, right? It broke above this 63.36 level. It retested it and hopefully it can now move higher. We're of course tracking like technical indicators. So the MACD is really negatively diverging. So it's losing momentum, the current rally. It's a condition. It's not really a trigger, right? We trade price. So price is the trade trigger. And that's why we have these warning levels in combination with our Elliott Wave count. And of course, we look at money flow. Liquidity is very important for the financial markets. If liquidity dries up, eventually there's nothing left to drive price higher, and price starts, of course, to move lower.
You
and
think
it's
Bitcoin
slowly trickling lower, but still no
Bitcoin,
effect.
Can you hear me, Arno, when I'm talking?
Yes, I can.
You can. Okay. Do you think that Bitcoin not going to new highs, which is also a measure of liquidity, could be a warning sign for a correction?
Yeah, of course. We do believe Bitcoin is going to go much higher. Funny you mentioned. I do actually have a chart here. And we still look for somewhere around 164,000, potentially 216,000. It's not done yet. It shouldn't be done until late November. Based on the previous, what we call 4 phases of Bitcoin. Bitcoin has a 4-year cycle so far. And as long as that sticks, it sticks. It's a past performance, no guarantee for future results. But if it has done that 3 times in the past, all we can do is, of course, assume it will do that now and into the future until proven otherwise. These are just normal standard Fibonacci-based extensions. And we have some good alignment at around 165,000. So that's where we think we're going to go on Bitcoin. And I do want to show, actually, we have a little chart here with money supply. And this is from a guy on X, his Colin T Crypto. I got to give him, of course, credit where credit is deserved. Let's move this chart a little bit around. So you can see here money flow, the global money supply, offset by a certain number of days, 98 days forward or 112. And normally, right, it takes time for money that's being created to work its way through the system. It goes to companies pay people the salaries go into savings, and et cetera, et cetera, et cetera, till eventually money hits financial markets, which are often the last resort because they're, of course, the riskiest. And you can see global money supply keeps rising until about late October. Into November, which starts to match those 4 phases that I just showed you with the top due into November, December. And you can see here, right, global money supply was declining, crypto was declining. And in general, global money supply is rising, crypto is rising. Yeah, of course, there's not always exact correlation, but That's, of course, not everything explains everything all the time. And we should move higher in Bitcoin. So that matches our Elliott Wave, and it matches our time cycles as well. So we stick with it.
Okay. So I've seen the 6,800 number a lot in S&P for targets.
Yes.
So
Yes.
how did you come up with that target?
Okay, let's see here. So this is the daily chart. So this is now based on a 300% extension. I think in our previous call, we were tracking a standard Fibonacci-based impulse pattern, which would then lead to about 6,200 to 200%. But that doesn't mean the market has to top there. In this case, we're really in a extended, we believe, fifth over fifth wave, and still only in a third wave of that one. We still need to see a larger fourth wave pullback and then a fifth wave. And then it's about 68.15. It's around the 300% extension. You know, we give it, of course, a little bit of wiggle room. It can go one Fibonacci lower, one Fibonacci higher. But, you know, first things first, let's see if we can surpass the current target zone that can allow for a larger pullback. If we surpass 6460, we can go to 6600 before we see this pullback, which is fine. Again, as long as the price stays above our warning levels, we can stay comfortably long. And 6800 is then based on that 300% Fibonacci extension. Now, if we then zoom out, same kind of chart as we showed here for the Dow Jones, it's the same wave count. We are in this large impulse. I think I shared that in a previous call here from the March 2020 COVID low, which was a large primary fourth wave. And we still are in a next impulse higher, and we haven't completed that one yet. It's only part of a third wave, which in an ending diagonal tops between 123.6, 138.2. Normally, we don't have to, but that's kind of typical. So that's what we're expecting. Slightly different wave count here. Here we have a few more 3, 4, 5 waves to wrap up on the weekly chart, but on the daily chart, we're just going to do one more low, one more high, and eventually get into the target zone. 6,800 is right there in this ideal target zone for wave 3. And then we should see a large pullback for a 4, you know, similar to what we saw in 2022, something like to that extent. And then a final wave 5 to about 8,000, somewhere around there.
Yeah.
That's what we're looking for. So, and then 6,800 will match, of course, with the 50,000 on the Dow Jones with the spike breadth thrust and all those goodies.
Okay, you're the second person I've heard say 8K. So you're one of the ultra bulls.
Oh, okay.
Yeah. So when's that going to complete? Does that run through 2026, 27, 28?
Yeah. So
all the way to 28. So
yeah.
we get a pullback in 26, going into the midterms.
Yeah, that's kind of what we're looking for. What we're tracking are the Armstrong pi turn dates.
Okay.
And this is from Mr. Armstrong. He has it on his websites, how he calculates all this. And we're simply tracking it, see if it's valid. And it is working pretty well. Not always, as usual with the market. 60% of the time, it works every time, right? But you can see here we had, of course, a nice confluence of different parts of cycles right at the end of 2021 that causes, I wouldn't say it cost it, but then 2022 happened. We had here early 2024 pullback. And then right on time here, early 2025, we had a pullback. So these ones constantly point towards tops. So 2019-20, it missed it a little bit. It's fine. 2018 nailed it. 2017 kind of missed it. But then again, 15 nailed it. Most of the time, these turn dates nail it.
And
so the next one is not due 26.
Like the first quarter or so.
Yes, correct. And then we have massive confluence in 2028, akin to what we saw in 21, 15, etc. So I think once we get into Q1, Q2 of 2028, we're starting to look for a much larger top akin to 21 or even bigger. So again, you know, this has worked for a long time now. So we assume it's going to work going forward.
I think I talked to somebody or heard it that Armstrong, his pi system is looking for a pretty intense August. And he's also talking World War III next year, isn't he?
Oh, yeah. I wouldn't be that dooms
Yeah, I know.
clock type of
Well,
person,
yeah, I
but
guess you could pick and select what you like from the guy, you
yeah,
know,
yeah, yeah,
by his
yeah, yeah,
whole
yeah.
scenario. Yeah.
Yes, yeah, yeah. No, just as Blake mentioned before I got on the call, they have this wonderful traders room where they don't talk politics, where they don't talk religion, just purely focused on trading. I do the same in my work. I leave all those speculations out. We only look at price. I don't even mention the Federal Reserve meeting. I don't mention earnings. Nothing. Pure, just price. Everything else, I leave it to the Armstrongs and other people to discuss those. And I'm not saying they're not important, but for me, it's very hard to forecast the market based on events that have not happened. So could be,
Okay.
who knows? Yeah, tomorrow
You know,
a
oil's
bird
been
can
actually,
also poop on my head. Yeah.
yeah, oil's been, rallying in the face of a lot of bears.
Yeah,
Uh,
yeah, that's really good. We started just covering oil in our newsletter. We're starting to get bullish on oil, so it's starting to
okay.
look good. Absolutely, there seems to be a good rally around the
What
corner. Just trying
what
to
do you
figure
make
out if
of
it started.
what do you make out of this dollar rally?
The dollar?
Yeah, well, the rally we've had from
Oh,
96.
I'm sorry. Yeah, I don't follow the dollar. Just
Okay.
maybe I
All
should, but
right.
I don't. Yeah, that's
Okay.
my honest answer.
Yeah, if
But
it
going
doesn't
back to
hurt.
Armstrong and his bad August, so we are tracking, for example, seasonality, and seasonality does tell us that there could be a top lying around either early August or somewhere in September, depending on which seasonality you pick. This is just average seasonality of all years. And the
Yeah.
first one I showed you is just seasonality of post-election years. And currently we are, of course, in a post-election year. So we've been tracking this. It's been following post-election year reasonably well with a low due in early April. Well, of course, we got that low. We had a bounce around March. We had a low somewhere in February. And then the continued rally with some pullbacks that have most of the time materialized, sometimes not completely. But it's okay if you're looking for a pullback in a larger uptrend. That pullback can sometimes be just a one-day event. But that's kind of what we're looking for. So if Armstrong is correct, then seasonality aligns with his assessment that, yeah, from early August into October, things don't look too peachy. We don't really hang our hat on this. It's kind of like a roadmap, great for as long as it works, but I wouldn't base my trades on it. It's just something that we use like as a third level assessment. Like, does it fit with our Elliott Wave, right? The Elliott Wave is still our level one. And then we're going to look at market breadth, and then we're going to look at seasonality and sentiment and that type of stuff. So yeah, either a top is due in, I would say, a couple of days, or we have to wait for another month to be determined. So that's then why we use our warning levels. As long as we stay above these warning levels, we can just chuck along. But if we break below them, we know, okay, hey, we start breaking below these warning levels. Let's start paying attention to this map a little bit more, right? Because you do want to
And
avoid this, right?
yeah,
As a
yeah,
swing
you want
trader.
to avoid what
Yeah.
happened last April too. So
Right. Yeah,
yeah,
absolutely.
yeah.
Absolutely. You
So
do
let
want
me
to
ask,
get in though, but first
yeah,
you want to avoid it. Yes.
are you following gold?
Yes, we are. We're not too bullish on gold anymore. We think gold is going through a little bit of a pullback. Let me see if I can pull it up for people. There. So this is oil. So real quick, oil, we think it did 5 waves up from 2020, 21, 22, and it's now correcting, and its correction should be about getting completed, but we don't have a final answer just yet. So it's time to start paying attention, and that's why we start bringing it to the attention of our newsletter members. Like, hey, it's the risk reward is really starting to favor reward, with risk somewhere around maybe this is Brent about $30, and then reward could be $300. Let's see, gold. So this is an ugly chart. This yeah, so it's been really messy, and we think we're in a larger fourth wave that's going to resolve lower. But we haven't made progress since pretty much April. So
Yeah.
this has been quite frustrating. This looks like a consolidation, but a corrective consolidation that most likely it's going to go a little bit lower. Let's see if I go to the monthly chart. Yeah, we should have topped here for this larger third wave, get a pullback for a fourth wave, and then still a final fifth wave to new all-time highs, still waiting. And this fourth wave here in black, that can last for several months. The previous 1 degree smaller fourth wave here in red lasted 2 months. So this one can easily last already 4 months, if not longer. So we like this. If you look here at this primary fourth wave, it's a degree higher than this black fourth wave. It lasted from 2020 all the way to 2022, which is 2.5 years. So anywhere between 4 months and 2.5 years of a correction in gold is not uncommon.
Okay, great review. Great
Thank you.
review, Arno.
Thank
So
you.
how do people sign up?
All right. So yeah, we have, of course, our website, and it's called intelligentinvesting.market, and people can, it's a one-click wonder. You get everything what we do. What we just talked about, Bitcoin. You get gold. You get the stock markets. You get our ETF trading alerts. You get our Magnificent Seven trading alerts, crypto, all in one beautiful little newsletter you get daily, and very simple. You can read more about it if you click on any of these portfolios that we offer. It's all included, and your first month you get 50% off. And every day we just send out an email, and it has everything included after market hours. It takes, of course, a little bit of time for us to write this. And with our Elliott Wave count, with our warning levels, I think it's a wonderful combination, because I see too often people say that, oh, the market has topped. But here's, for example, the NASDAQ. They say, oh, we did 5 waves up, so now we're going to see a correction. But then, no, we can also get 9 waves up, or we can get 13 waves up, or as long as the market keeps subdividing and moving higher, it can keep on doing that until it eventually breaks below key levels. So that's where they can find us. We have good performance. This is from last year. I think our work, this is what we track ourselves, was up about almost 50%. So we definitely outperformed the market, which is up 25%. And if you just like Blake said with their trading room, just objective analysis, no BS, then this is the way to go. And are we always right? No. Do we change our work? Yes, constantly. It's just like weather forecasting. You constantly update your work as the market gives us new data. But again, as long as we stay above these key levels, then the update doesn't matter. It simply means that we're adjusting and flexible, and understand that the market is changing in front of our eyes, and that our assessment was wrong to proven right. Right? That's how we do it.
Do you use Discord?
No, I don't. Just a newsletter. That's it. Very, very simple. Send out by email every single day at around
room,
2 p.m.
No room where your members get together.
No, not
just
at all.
Just a letter. No. Okay.
Just a letter. We've done it. Then we eventually ended up in policing a lot of stuff, and just don't have the bandwidth for it. But if you like to just read at your own pace and follow along. Of course, we do ask, some education. You should get a little bit educated in the Elliott Wave, so you can follow along with the technical jargon that we, of course, use. But we got that. You can educate yourself here on our website about the Elliott Wave, just a basic understanding. And you can always send us an email. We always reply, of course, as a member. Then if you have any questions like, oh, it's unclear, or, sometimes, of course, we make an error in the numbers, right? We mix up the numbers because, we're dealing with at least 12 charts a day. So even if we get 95% of every chart correct, it always means one chart can be wrong, because we're human, right? We make mistakes. But if you understand a little bit of the Elliott Wave, you like technical analysis that is based on, different levels, market breadth, seasonality, trying to combine all that into a weight of the evidence approach that oftentimes leads to the highest chances of being correct, then this is definitely the way to go. And again, we've been looking for a top somewhere around this region, but it doesn't mean it will top, right? We can always extend. And now we're just going to wait and see.
All right. Well, clarity you brought to the table, conviction.
Thank you.
And your demeanor is great, Arno. So,
Thank you.
your confidence shines through. Check out our no and ride the wave, like Saloom says.
Yeah, exactly.
Ride the
Just
rocket ship as long as it has fuel.
exactly.
So, yeah, go ahead, buddy.
Yeah, I just want to say, for us as Elliott Wavers and then as a Elliott Wave trader, you have to recognize a third wave or a C wave and trade those. Those are the high probability setups. Those are the big waves, the money makers. That's pretty much all you need to be concerned about. Once you can identify those, everything else is just noise. Ride that third wave, ride that C wave, like in April,
Yeah.
to the downside, reverse trade. I was hammering already late March, early April, buy this market, and it's been great. It's already a lot higher than I originally anticipated. I thought we would get a little bit more of a pullback before we move higher. Well, the market didn't
Yeah.
do it. So
No.
be it. It's fine.
Mr. Market tries not to accommodate.
No.
And when it does, you better be skeptical.
Exactly. That's a good one, Dale.
Yeah. So great to talk to you, my trading warrior brother. Really great.
Likewise. Thank you.
And we'll get back together in October. I'll send you a DM.
Sounds like a plan to me. Looking forward to it.
All right. Our notes are sure at Intel on X _invest at Intel _invest. So oh, Laura's cat is on her keyboard. So that's where you find them on X. And Arnaud is at the minimum worth a follow. And see what he's saying. And you want to delve deeper, he just gave you an option. So thank you, buddy. Good
You're
hunting.
welcome. Thank you, Dale.
All right, so that's a wrap, everyone. We'll finish the week with the NFP tomorrow. Be here to react to the reaction. And remember, don't just count your pips, count your blessings. The team will be on the morning edge in 14 minutes. Sign up so you could join them. And we'll see everyone tomorrow. Adios. You're welcome. You're welcome, Mandy, Will, Laura. See you guys.